In this presentation, we will process payroll that includes health insurance that is employer paid. We will compare and contrast this to payroll processed in the past, which did not have employer paid health insurance, but did have other types of insurance, including eye or vision insurance and dental insurance that was employee paid. The major distinction here being the employee versus the employer paid benefit of insurance within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our S-Corp paid payroll file. We're going to go down to the Workers tab on the left side, and as we scroll down the Workers tab, we see that we have the two workers now, Anthony and Beth. So we've added our new worker, Beth. Beth now being the one that has this new option for the insurance employer paid. Very, very similar, however, to Anthony in terms of every other format, so that we can compare and contrast the results for Beth having this different benefit to the benefits that Anthony has. So to do this, we're going to go up top and we will run the payroll. Within the payroll, we're going to go back to the first pay period. So you'll note that we've ran payroll up to now 5 times for every month, January through May. And we don't have any more options in our example problem now to go past May. You may have different options depending on the point in time that you work this problem. But you still, even if you can go, say, to June, you probably want to go back to January so that you can compare what is going on in your system exactly to what we do here and be able to compare and contrast if there are any differences with that process. So we're going to go back to January, run payroll again for January, however, only running it for Beth, not Anthony. So pay period, January through the 31st, 1st through the 31st, pay date, the 31st, the end of that pay period. And then we're not going to check off Anthony because we've already got that. If we checked it off, then QuickBooks would probably tell us, hey, they already have a paycheck, so it's already here, so we already have a paycheck. What we want to do is check off Beth and create the paycheck for Beth. So we're going to enter the information for Beth. Note that the hourly rate is the same at the 25, and we're going to enter the same information for the hours, which is going to be 161, and we're going to enter 1. So we've had the same hours that will be recorded, and we'll see that familiar 4,062.50 as we've seen for all of the checks for Anthony Moore. So they're being paid on a gross basis exactly the same. See the detail of this 4,062.50 by selecting this pencil item to the right. And now we've got that calculation. The 161 times the 25 is the 4,025. The 1 times 37.5 is 37.5, as we've seen in the past, to make up that total 4,062.50. That's not going to change with the new item, the health insurance that we have added, even though we're really given a benefit that's greater than that 4,062.50. Note what's happening. We're paying the employee 4,062.50, and the employer, if we select this bottom line item, the new item that's going to happen is the medical insurance. That's $110 over and above the gross pay, not being included in the gross pay. So really the benefit that's being given to the employee is going up by this $110, the medical insurance, because we put it in the system as being provided by the employer and not really running through the payroll process, not being part of the paycheck calculation, not even the top line of it. It's not included in the gross pay. So that's important to note. And it can be a little bit confusing when we start to think about our benefits and what our compensation is. So then we're going to scroll down and take a look at our employee taxes. So if we select our employee taxes, we've got the $169.17 for the federal tax, Social Security, and Medicare. And then we've got the California taxes down below. The federal income tax is going to be something that we need the tables to calculate. Note that the taxes may differ from Anthony, even though everything else is the same, including the marital status and the withholdings, because we have differences in Anthony in terms of mainly the vision insurance, which was going to be reducing the gross income for the calculation of taxes. So if we scroll down, we'll see that in the second presentation when we do some comparisons from check to check. And then if we scroll down to the employee deductions, so these are deductions from the employee check, we see medical insurance, but nothing there because we said that this was all employer paid. So we have medical insurance, but nothing is included, just so we can emphasize the employer portion. Again, our goal here is not to say how would we qualify or look at the rules to qualify for this. It's really to look at, once we have the settings set up, what do those different settings do within QuickBooks? How would we input the different settings? What's the effect on the taxes as we enter this information into QuickBooks? And this portion is looking at an employer paid health insurance plan, as opposed to one being taken out or deducted from the employee paycheck. Then we're going to go down to the employer taxes. So these are being paid over and above the taxes to the employee. Notice FUTA reappeared. It was gone in the prior presentations. Why? Because this is a new employee. So this employee hasn't hit the 7,000 cap yet, and therefore FUTA reappears. So FUTA's, if you don't understand FUTA, it's just going to be one of those weird things, like it magically pops up and then it goes away. Why does that happen? Well, in this case, why does it happen? When someone doesn't get to the cap, then it's going to be there. We're going to calculate the federal unemployment tax on a employer tax until the employee gets to a gross wages cumulative for all their checks up to 7,000. This is the first payroll for the second employee, and therefore we're going to calculate FUTA on it. Then we have Social Security and Medicare matching in a similar fashion as we see in the past. We're not going to emphasize our attention on the California taxes. And then we have this stuff down below, which we looked at prior or first, which is the company paid contributions. These being contributions that company is paying over and above the payroll, meaning in some format, if they're down here, they're allowed, and it's allowing us, basically the IRS is allowing us to give benefit without including it in payroll. And the reason, again, that's so important is that if you can do that, then of course we're able, whenever that's possible, and it's not always possible, it's rarely possible, because the IRS wants to include it as wages, because if it's included as wages, then not only do you have the federal income tax, but you have the Social Security and Medicare employee and employer portion. So there's not many things, in other words, that you can basically give to your employee and not call wages. So that anything that you can qualify to do that is a huge benefit, even though it's difficult to explain to the employee how big of a benefit it is, because it actually isn't included in their gross wages. So when they consider how much they're earning, these benefits aren't there all the time, and to really get a true idea of what's being earned, they should be. So we're going to go ahead and say OK, and then we got the first pay period. That looks good. We're processing just Beth Smith, so that looks good. We're then going to preview the payroll, so we will preview the payroll. Now we have the overview of the total pay and the net pay and the employee taxes, the employee portion. We will then submit the payroll. So we're going to submit the payroll, and then we're going to say the paycheck. I think we're on number 1006, it's the paycheck now. And then we'll have the pay stub. So we're going to look at the pay stub. It'll be a little less confusing now. We always have to provide the pay stub. And we could do it electronically too, so it could be paperless if we do it. But we have to give it in some way. We can't just give a check without the pay stub, without the information, without the detail. So here's the $3,527.60. That's the net check. That's what's going to be showing up on the bank account. Then we have down here the summary of it. So notice the summary is just the total pay and minus the taxes, nothing else included. There's no medical deduction down here, in other words, because the employee portion is 0. We're not showing the employer portion because it's not part of the calculation of the net pay or the gross pay. It's not part of the payroll calculation. So the benefit that we put in here, the employer portion, the medical insurance provided by the employer over and above gross pay, isn't here. So the detail we have for the taxes, this line on the right, federal income tax, Social Security, Medicare, and then the California taxes is this detail. And we can see that now it's a bit shorter of a check than if we were to compare to the prior checks, which we'll take a look at more in a following presentation that we had for Anthony, our other employee, which had 3 benefits, 401k plan, dental insurance, and vision insurance. We can now compare and contrast those items to what we're going to include here as we go forward for our new employee, starting with just the medical insurance that's employer provided as opposed to employee provided. So I'm going to close this back out. The other thing that might be useful to check from time to time is I'm going to go down and finish the payroll down below. And so here we're back to our familiar payroll screen. I typically like to go down to the accounting tab sometimes and go to the chart of accounts up top, and then just go to our checking account just to verify that we could see the checks that are written. And notice we're just running payroll. So there's actually no money in the checking account because we just want to see one thing, that being payroll, so we can concentrate on it. And so we have another paycheck down here, 2 on January now, 1 for Beth, 1 for Anthony. So we'll be able to, of course, see these checks as they're being processed in our check register. And then we continued on for checks for Anthony until May. For more accounting information and accounting courses, visit our website at accountinginstruction.info.